Hi, this is Aptamer with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday the 22nd of April. And the excitement overwhelming here in the sense that you can see that there has been a rising trend channel on the daily chart of the FTSE since 2007 when we were all young. That is heading up to 8,500, which I suppose at the current rate of progress, if we have no geopolitical disturbance, would be hit by maybe sometime in June, something like that. But obviously it could be sooner. If you look at the near-term situation, I've drawn the parameters of the FTSE recently as a rising wedge, but bounced off the uptrend line there from back in January. And that resistance line there, the initial target at 80.80. Above that, we're looking for the top of the rising trend channel from from December, in fact, up to 82.50, which could be hit by the end of next month. Obviously, that would be a massive breakthrough, given the way the FTSE has been very keen to avoid going to record territory for many years. The other points to note are the way that we've obviously had great clear candles, or blue candles there since the middle of last week. Bounced off that line 3 times, and also Friday was a great hammer candle. So far today for Monday, we've opened at the low and closed, or currently at the high. So the price action does look very strong indeed. RSI back above 60 as well. So plenty to get excited about if one is in that kind of frame of mind these days. But 80.80 and then up to 82.60 perhaps on the cards over the recent or the near term. In terms of the downside, if we do break that January line, then it's the 50-day line there at 77.80. Worst case would be back to March support and the 200-day moving average near 7,600, but we're not really looking for that given the strong near-term price action and climbing of the geopolitical wall of worry. Moving on to the DAX, and here bear trap rebound from below a rising 50-day line, that's around 17,700. Want to see this market break the March or late or early April resistance line there to 18,000. Above that, then we have a chance of testing 18,500 by the end of next month. On the downside, not expecting anything lower now than the top of that February gap, 17,300. Moving on to the Dow, and here the situation saved at the end of last week, but obviously it's been a horrible month so far. And bear trap rebound from below the late January support there, 37,700. Above that, hoping for the 50-day line, 38,800. But at this stage, don't want to get too excited about the market's prospects. The good news, I suppose, in terms of the RSIs, we bounced off RSI 30 again, as we have on all the recent dips, especially that one back at the end of October. Moving on to Bitcoin, which has revived itself after the confusion caused by the halving. Bear trap rebound from below the March support there, around 60,500. Initially, we're looking for this market to break that March resistance line around 68,000, and that's also very near to the 50-day line above 68,000. Looking for not only the record highs that we had towards 74,000, but also 80,000 plus by the end of next month. RSI still below neutral 50, which is interesting, so maybe some people might want to wait for that to be cleared before thinking it's safe to come out. On to gold, and here, whether there's geopolitical trauma or not, it seems to be going up anyway. A sort of narrow, sharp rising trend channel there from February. Floor of the channel currently around 23.80, and above that we're looking for the top of the channel at 25.30 as soon as the end of next month. RSI obviously very overbought, but this looks like a, won't say once in a lifetime breakout, but a pretty serious one. Moving on to the stocks, and Aptamer is first. We have been sniffing around this previously, and good to see it finally break out. We already had a gap through a resistance line there from earlier in the year. That was around 0.54. At that time, the initial target around the 50-day line, 0.63. Above that now, and we're looking for 1 pence as soon as the end of next month. So quite a decent turnaround there for Aptamer, and bear trap gap reversal. In fact, a double bear trap gap reversal, double gaps rather, for this particular stock. You can also add in the bullish divergence that we've had, so lower lows for April, but higher RSI trace, so everything positive there on that chart. Just wanted to look at Avacta again because I sort of felt there was more to say. In fact, the detail here is that there's a resistance line there from February that is basically at 48 pence. We need an end of day close above 48 pence to give us the move up to the top of that triangle, and recent resistance at 58 pence, ideally by the end of next month. On the downside, there is a support line there from the end of February at 45 pence, and that is the line that should not be broken. In terms of the RSI profile, we have an element of bullish divergence, but again, we don't want to see that line there broken from last month in terms of the oscillator. Moving on to AEG, which had a bit of a flurry last month. Very exciting flurry, in fact. Unfortunately, as is often the case, the shares did not manage to sustain the move, but here you can see that we've got the shares trying now to fill the gap up to 0.5 pence, an end of day close above 0.5, and we could be back up to 0.73 in the top of that broadening triangle from March. Ideally, we close today above the floor of the gap there from earlier in the month at 0.4. So everything we're here really depending on closing above 0.4 and filling that gap up to 0.5. On to CleanTech, which had double good news in terms of licensing and also the prospects for listing on the ASX. Here you can see that we've actually had multiple days of bullish candles, which is always nice. We've also had a gap close buy signal, so we closed above the gap there at 14 3/4 above that. Looking not only for that resistance line there from back in November around 16 pence, but up to 22 pence, perhaps by the end of next month. The longer we stay above that 14 3/4 pence area, hopefully ASX speculation might help the cause there. On to a stock where a few people are jumping up and down on Twitter about. Here we've got the Cambridge Nutritional Science chart, and here we're already on the case in terms of where the stock could go. Initially the target was up to 3.2 pence after we broke that line there from 2.3 pence, and best case scenario target that time up to 4 pence, which is the upper parallel of that broadening triangle. If you're a fan of the shares and looking for greater glories, I will try and get them with this current situation, i.e. up to November's peak at 4.3 pence. Hopefully we'll get that over the next couple of weeks. Ideally we stay on the right side of 3.25 pence in the meantime. We've got the 50 and 200 day lines both rising, and a rebound off RSI 50, which are all decent continuation signals. Moving on to E-Star, which has revitalized itself this month with the copper asset sale news. Here we've got this what I call a rising bull flag heading towards the second target there, as high as 4.3 pence, which is an early 2023 resistance line projection, looking for 4 to 4.5 while we're above 3 pence on E-Star. Hellenic is next with funding news, and here we can see that the shares trying to break out of the recent falling wedge there. There was actually a gap higher today, so it's in theory it's a bear trap gap reversal, one of our better signals. Probably want to leave it up to the 50-day line to be broken at 2.8 pence before we assume that 4.5 pence could be on the cards by the end of next month. Stock which I haven't looked at for quite a while is GSTechnologies, and here we've gapped up off the floor of this rising trend channel from back in June last year, top of the channel there at the old November resistance at 2 pence, so that's what we're looking for by the end of next month, while we remain above the floor of the channel and the 50-day line at 1.17 pence. The requested stock is next, Tech, and here we've had a bear trap island reversal, so gapping down and then gapping up. We already had a sideways shuffle above a rising 50-day line going into today's news, so maybe one or two clairvoyant people guessed that there was going to be good news coming up. Initial target here up to 16 pence at the top of that broadening triangle. Second target maybe by the end of next month as a best case scenario target, obviously up to 22 pence, but I suppose 16 would be, most people would be happy with 16 on that situation, while we remain above the 50-day line at 9 pence. On to Marula, where signs of a rebound here at the floor of the range. You can see that we've had this rising trend channel in place basically since the early part of last year, and that fits very nicely. The floor of the channel there at 8 pence, and we're looking for basically at the top of the range, 14 or 15 pence for Marula, while we stay above 8 pence. Seed Innovation is the next on the list. In fact, Seed Innovations, to be precise. Here we've had a bear trap gap reversal, and we followed through on that. We had the gap up day last week, and above 2.6 pence, looking for as much as 3.3 pence. Hopefully a bit of dividend buying in the stock, and a rising 50-day line. In fact, the rising 50 and 200-day lines there doing the trick. That suggests we're going to golden cross, and that tends to be the strongest part of the cycle, which it currently is. In fact, this is also a bear trap island reversal with gap down in March. I missed that. A retest of 4.3, 4.4 pence resistance from last October could be on the cards by the end of next month. The initial target there, 3.3 pence, but the key here is staying above that 200-day line around 2.4 pence. Looking at a stock on the Aquis market, because somebody has to, and it looks like it's only me who does that. Here we've got Tectonic Gold, which was also up on Friday, but I left it on Friday. But here you can see that for those who are interested, there's a broadening triangle there from back in July, and that is heading for 0.42. So hopefully we'll get that while we're above the 200-day line at 0.26. I shudder to think what the spread is on that stock. Moving on to Upland, and here shares have gapped up. We've been quite happy about this stock in the recent past. We've got the rising 50-day line there, and support's come in above the rising 50-day line, and now we've got a gap higher. Initial target here, or a retest of the recent target at that price channel top around 4.9 pence. Above that, looking for 6 pence plus by the end of next month. So basically, the idea here is that we stay above 3 3/4 pence, the recent swing low. On to the last two, and Union Jack mentioned again, largely because it keeps doing what we want it to do on a technical front. Here you can see that initial target here was 21 pence after the gap close day that we had back on the 5th of April. Next target was up to 23 or 24, and we're currently looking for 28 pence plus, while we're above 24 pence, hopefully 28 pence over the next couple of weeks. If we're really lucky, it could be by the end of this month. Finishing off with Zinnwald, and here the rising trend channel base has been in place since the early part of February. What's interesting here is that it was a failed gap fill, so there's a gap higher back in February, but the stock found support above it. That's a bullish sign and suggests that 7 pence is a minimum here, and obviously we'd be looking for 8 pence maybe by the end of next month to retest the February resistance. A series of positive candles there also helping give confidence. That's it from me today. More updates tomorrow.